Well, hello to you. And I'm super excited to share this deal, this investment opportunity for you in terms of where it is, Phoenix, America. And it's industrial leaseback. And what's really interesting to me is you're looking at an 8% income return and an IRR, total return of about 17% a year, which means that you're looking to double your money, a 2x return over 5 years in total, in terms of a ROI of over 20%. So I just want to share with you some of the deal highlights. You can obviously go to the platform and you can read all about it. So, I mean, just very quickly, you can, if you go down to the platform here, you can literally go into the platform, you can see all about it. You can download the documentation. So this is the documentation I've got here. But I just wanted to take out some important pieces that I thought were relevant for you in terms of where. So just the way my brain always operates, firstly, I'm not giving you financial advice. I'm just sharing with you my opinion on the things that are important. So the first one is why we're here. So this is an interesting one. This deal came out in April last year, and a number of our high net worths invested in it. And we put, it was a quick deal. We had to participate quickly. And there was an investor that committed $500,000, nothing to do with us, someone else, from America. And they promised the money would come, and Judd actually, who's the partner, funded the deal. And then, the money still hasn't come, and it's pretty much a year later. So he got hold of us and he said, hey, your high net worths got involved, right up front. Would you like to be able to participate and take out, it's called an equity release, take out the other $500,000 at the same terms that we invested in a year ago? And I was like, 100% I'd like to do that. It's a great deal. It's performing and it's getting results. And it's also paying monthly returns. So, it's this whole adage of a bird can fly further in a flock than it can on its own. So as an individual investor, we can try go out to America. We can try invest in industrial property on our own, or we can do it together. So what are the key points? Firstly, the partner. So they specialize in institutional excellence for private investors. They've got an 18 years worth of experience. They've got over 50 million under management, and they've done over $1 billion, facilitated over $1 billion in deals. And they're seasoned professionals creating above market returns. They're also partners and owners. So they invest in all their own deals, their own capital. They take out, surety on the mortgages, etc. So they tick all of our boxes. They've been specialized in one market, which is the industrial market, for a long time. They're niche focused. Secondly, they've got more than 10 years experience, in fact, nearly 20 years experience in doing this, and facilitated over $1 billion worth of deals. And thirdly, they put their own money into the deal. So that's, it just allows us as investors to invest alongside them in terms of it. Now, when the capital markets are very volatile, you need someone that's a strong team, understands how the banks are working, understands what's happening in the local markets. And this is exactly what they do. In fact, they specialize in this volatility and taking opportunity of markets. Now, Morgan Housel came out with a report, and they said, if you consistently invest through recessions by the age of 65, you'll be 30% better off. And Judd, this is actually his third recession. So while most people are running away when the capital markets are in trouble, he's actually saying, no, there's real opportunity. It's that whole thing from Warren Buffett, when there's blood on the streets, and, basically seizing below market value properties in this time. Don't wait to buy real estate and wait. And, it's very important that you get, good real estate with the fundamentals in place. And although the market's been tight, they've actually made over $50 million worth of offers over the last 12 months. So been, aggressive in the market, but in primary markets, because again, there's blood on the streets, there's good opportunity, but they've been in the primary markets with the primary fundamentals, and Phoenix being one of them. So this is where Phoenix is, just if you're not sure. So it's just near California, down in the southwest of America. And what's important with Phoenix, it's the second fastest growing industrial market in the country. JLL said it's one of the top 3 markets to watch in 2023 out of 60. It's got very strong proximity to Southern California. It's got population growth. And it's actually the fastest growing city population over the last 10 years, and is expected to go to 2 million people by 2026. It's very business friendly, so it's very tax friendly. The Phoenix MSA, which is the Metropolitan Statistical Area, is one of the top 5 industrial markets with exceptionally stability with low vacancies and double-digit rent growth. So rent growth has been over 10% in the industrial sector. The property is also situated in the urban fill. So you can see this picture here. It's actually in the CBD area. So there's not a lot of space or competition to build other industrial logistics units. There's a strong corporate environment. So it's one of 3 states which has experienced full recovery. It's the 5th largest MSA in the country in terms of a megaplex. It's the #1 city in America for population growth in the last 10 years. And there's been large tech investment in semiconductors, chips, and batteries in terms of this process. The key points around the deal, one of the things I like is you're buying it at 39% below replacement cost. So that's a very good measure in terms of, are you getting it at an affordable price? There's been 13% rent growth in the area. The vacancies are sub 4%. It's an 8% cap in a 5.8% cap market. So that means you're buying it at roughly a 25% discount. There's a high barrier to entry as there's very little space in the area. There's an 18-year lease in place with a 25-year-old company called Air Baggett. So long track record with an 18-year lease in place. They've got 3% in terms of the rental escalations, and that's all in place over the years, basically. And they're also going to reinvest $250,000 back in the property in terms of the triple net lease. There's $6 million in revenue, and they're aiming to grow it to 12 million. So again, this business owned its building. It's going to sell its building so they can reinvest in their business and grow their business. They believe they can get a higher return on capital in terms of building their business. And so we've bought the building, we own the building, and we lease it back to them over an 18-year period. To purchase it was $10.4 million all in, and Colliers actually believed that there was $1 million in equity when we purchased it. And the nice thing is that even though we purchased it a year ago, that's been passed on to the investors now in a straight deal for that $500,000. There's a 7% cash on cash, although that's actually growing by 0.25% a year up to 8% and beyond. And the debt is fixed for 7 years at 5.9% with a 70% loan to value. So one of the biggest risks in property is making sure that your debt is secure, which has happened already. And Judd and DWG have taken personal recourse over that debt. So some of the key points on the deal are that it's a cold storage building. So that means that it's got a lot of defensibility around vacancy. And where you're looking at, there's an 18-year lease with security. So Mike Wilson, the owner of the company, has personally guaranteed the lease. So that's important. There's strong market comparables. You can see them here on the right, and you can actually go and look at them on page 11 in the documentation. So if you go here, you can see the strong market comparables of both what we're buying it for and what we're leasing to make sure that it's effectively below market value, which is exactly what you want. There's a construction pipeline in Mesa is minimal as the submarket continues a full build out. So again, in Phoenix, there has been a lot of industrial build out, but way out in the suburbs, but not in the city center. And there's very little space in terms of that space. In terms of the risks, it's a single tenant. And so it's important that you've got a partner on the ground that can really vet that tenant, the financials of that tenant, and the security of the lease. The strategy and actually how you do that single tenant net lease back. And that's why it's so critically important to have a partner that's been doing this, for 18 years and facilitated over $1 billion in deals. They focus on middle market investing. So they literally go after the sweet spot, not the large, massive deals that institutions want to do, and also not the deals that mom and pops want to do, but sort of the middle market, kind of $5 to $20 million in terms of that process. One of the risks is a rise in interest rates, but as I said, the interest rates are fixed for 7 years, and they've also got reserves in place. And then finally, in terms of the return on investment, you're looking at a 7% cash on cash, a 17% IRR, a 3 to 5 year hold. If you put $100,000 in, you'll aim to double it in 5 years, which is a 2x on multiple. The ROI is roughly 20%, and it's already been owned for a year. So we know it's a performing asset and is actually paying dividends monthly in terms of that process. And again, you can go on the platform and read all about it. So you literally go to wealthmigrate.com and you can, if you go in there, and I'll just go back to it quickly, I'll show you. If I go back to the platform and I just go to the marketplace, you can see the different deals here. you've got the Air Baggett deal, and then you've got the Germany deal in terms of two live deals. And in conclusion, it's an excellent opportunity for investors to looking for attractive returns in a stable market. And from my perspective, one of the things that I know our high net worth investors really appreciate is the fact that it's actually paid monthly in terms of your returns. And so thank you. I hope you enjoyed it. This is a very quick video. We are doing a full webinar with regards to this. But for now, this was just to give you a quick highlight of the deal. Cheers.